So currently I'm looking at this net 100 supply. Right, we got a nice breaker structure. If I go to the 15-minute, the EMA is in the middle, which is not very ideal. The 1 hour is bullish, and the 4 hours also bullish. But I do like that we are running into all of the EMAs, so I think this can drop. So if I get a break of the candle on this red candle in a minute and 10 seconds, because that's when the candle closes, I will be entering in for sales, and this is what my stop loss take profit's gonna look like. Actually, not bad. This looks really good for me. Clearly, as you can see at the moment, price is just rejecting off the 200, the 13, and the 50 SMA, EMA, and SMA. So, which we expected, it's pretty obvious. That's what price likes to do. That's why I have the indicators on in the first place. But a rejection like this is something I definitely want to see. The only thing that I am worried about is that we are technically in consolidation, because we did break a high, now we're breaking a low. So the market is indecisive right now. It doesn't know where it wants to go. So this could easily lose. But one thing I do like is usually trades that take out liquidity right on the upside and then shoot down to the downside usually means there's going to be a reversal. So let me get ready to get in sales, because I'm about to get the break of the candle and I don't want to miss this one this time. Okay,
Order filled. Order filled.
I'm in sales.
Order filled.
So I'm gonna get one buy stop here. How many? I got in 3. Okay, boom, boom, boom. Actually, wait, I'm tripping. Hold on. I didn't even. Wait. Okay, so 1, 2, 3. Take these off, and then my take profit will be 47, but these aren't, this chart isn't accurate, so it's like about right here. 1, 2, 3. So the only thing that I am worried about is, yes, we did just come off a liquidity grab, okay? So this could continue to still go up, and we are in consolidation, so the market doesn't know exactly where it wants to go. So basically right now I'm trying to predict a market change. Like, I'm trying to predict a trend change at this very moment, which is a little bit risky, but I feel pretty good about it. So let's just see what happens. Yeah, that's take profit hit for sure. It's nice. And then obviously, like I said, I'm gonna leave a runner. We're currently at $65 profit, so that's half of what we lost yesterday, which is nice. And then I'm gonna leave the runner to maybe try to scalp a little bit more profit. That way I can make a little bit more back from that loss that I had the other day. Because that $130 definitely hurt the account. I'm back to
Order filled.
479. That's take profit hit. Okay, so let me just remove these three take profits and then add one and let this just run. Alright, I think that if this candle goes to the bottom of this green wick, I'm just gonna get out and take the nice $100 because I'll make back, I'm pretty sure, a little bit over what I lost on that $130 trade. So I don't need to be too greedy and ask for any more. But at the moment, what it's looking like is price is probably going to give us a little bit of a pullback and then continue back down, because if you're not new to the charts, you know the market doesn't like to just continue to drop and drop and drop and drop. Obviously, you're going to have it drop and then a little bit of a pullback and then continue. But we'll see what happens. Let's just keep watching this.
Order filled.
Alright, close my positions. I'm not going to get too greedy. Obviously, this could definitely continue to drop more, but it's alright. I made the money that I needed. 178 bucks. Wow. It's really nice. Yeah, I made back what I lost. Pretty happy with that. Today was a pretty nice day. I'm just going to go over what happened today. So I pulled up to the chart. The chart looked like this right here. This is exactly what the chart looked like. First thing I seen when I came to SPX was this low, right? You got this low right here being swept underneath by this wick. So I was like, okay, this is a potential liquidity grab. So I marked this up. Mark the lows up, and I told myself if price rejects or wicks underneath but doesn't close underneath the blue lines and then gives me a breaker candle to the upside, I'll get in for buys. Unfortunately, right, that's exactly what happened. Not unfortunately, but that's exactly what happened. But unfortunately, I missed the trade because I wasn't logged into my account, and the break of the candle obviously happened just like that, and it hit TP in one candle, so I didn't have time to get in, missed out on that, but that's okay. Wasn't mad because I still predicted where the market was going to go, so I'm pretty happy with myself. And then obviously you have this 5-minute supply, or 5-minute supply that price just tapped into. Now, why is this a 5-minute supply? Well, if I go back one more, or if I go back one more bar, you can see that no candle has tapped into this zone yet, right? You got gaps all the way from here, all the way up. This entire red candle from this white line to the top of the white line is a gap. That's what something you want attached to your supply zone. And then I had major breaker structures right here, one right here, and then you had the EMAs just above, right above it. So that, in my opinion, looked really good to me. So basically, all I told myself was, if price taps into this zone and then gives me a break of the candle to the downside, I'll get in for sales. So we just waited for that to happen. You got a tap, nice bearish candle, something you want to see. Obviously, look, it rejects off the EMAs. That's why we have them. That's why we have these indicators on, because they do move the market. And then we waited for the break of the candle, which we got with this little tiny wick right here. You see how this green wick just barely went underneath the red candle? That's when I entered. Obviously, I went for a 1-to-1 ratio, and the rest was history. So, yeah, that was my day. Today is Thursday, so one more trading day after this for the week. And yeah, that's pretty much it. I'm done. I'm logging off.